Welcome to Just Some Guy Trading with 2021 World Champion Trader Kevin McCormick. Welcome back to my weekly outlook for the week of March 19th. A lot of interesting trade setups this week. Before we jump into all of them, we're going to be hitting on the S&P 500 and the Federal Reserve meeting coming up, where it's now expected it's probably going to be a quarter-point rate hike based on the bank failures we experienced last week, and we discussed that in last week's update. But after we touch on the S&P 500, I'm going to jump into the grains, corn, wheat, and soybeans specifically. Then the energies, crude oil, and we're going to finish up with natural gas. As always, this is the order the video is going to go in. If one of these areas is more of interest to you than others, go ahead and jump ahead. As always, this is for educational purposes only. And just a quick update, as we've discussed before, I am the 2021 Futures Trading Champion of the World, and I'm in the contest again this year. Our short copper trade hit my profit target, so we had a nice little increase in the standings. As I said before, didn't trade much this week due to the volatility. Ramesh, on the other hand, he was out there trading or gambling, and he's up big. So let's get into the charts. We go with the S&P 500 to kick things off. As we discussed even before the banking crisis hit, I was looking for the market to retrace back into the levels from December. We did that, and we actually held the low this week, which, if there was a time to breach the low from December, this was the week to do it with the volatility. But I think the bad news isn't done coming out yet. And we're also kissing right up against the moving average here. So we did a kiss and collapse before, probably going to kiss it again, have a little bit pullback this week. Federal Reserve meeting is Wednesday. That's going to cause a lot of volatility. I'm going to be interested to see what the market does after that. We have a nice seasonal trade that it starts on Thursday that is bullish. So I'm hoping for possibly a little pullback and give me a little %R buy signal down here this week. I might look to enter the market, but it's still going to be highly volatile trading, I believe, for this week in the S&P 500. With that said, let's jump into the grains. Okay, we're going to start off with corn in the grain market. It's one I've been watching here for the last 4 weeks, looking for a pullback, and then what I believe is going to be the start of another bullish trend in the corn market. And we did get a liquidation and drop here over the last couple weeks. We're now in the overbought area with the Williams %R, so not the area that I usually like to be entering a buy order. And we also have the moving average here, 18-day moving average, setting up for a kiss and collapse. And we have resistance up here as well that held on Friday. So I'm going to be looking for a pullback and then possibly looking for buy signals to get in. But also I want to show you some of these other setups in corn. Specifically, let's start off with the COT report. The data is finally coming in again after the ransomware attack stopped the reporting for a while. And you can see here, massive long liquidation by the hedge funds started about 4 weeks ago, caused really this market decline and pullback, but they're almost flat now. Commercials came in and bought on this decline. China came in heavy this last week and bought a lot of corn. So people who actually want corn are in there buying in the market. And then the last thing that I think is really positive for corn right now is we have divergence in the premium spread. So you can see here, we had this decline over the last 4 weeks, but corn premium stayed in place. And then this last week really shot higher with the buying going on. So I think we're about to have a bullish breakout in corn. Ideally, I'd like to see a pullback first before that. But for traders out there who like the corn market, keep your eyes peeled and looking for buy signals in corn. So next up, let's take a quick look at wheat. Wheat has a DeMark 13 selling exhaustion signal this week. But at the same time, historically speaking, this is one of the worst weeks for wheat of the year. More specifically, tomorrow is usually the worst day for wheat in trading out there. And to coincide with this timing, we have the Williams %R, overbought in wheat, heading up and hitting the resistance in the 18-day moving average. So on Monday, I'm going to be looking for sell signals in wheat and taking those for hopefully a nice trade this week in wheat. And then from there, we might be ready to continue a trend higher, just like in corn. Next up, I'm going to jump into soybean meal, but we're going to take a look at that using the DeMark indicators and some resistance levels that were currently hit. The last grain I want to take a look at this week is soybean meal. I've been watching this one, expecting there to be a pullback coming. We had the buying exhaustion 13s hit, but we didn't have our usual instant market reaction. But here, coinciding with this buying exhaustion, we have the commercials have been selling heavily, and it also coincided perfectly with these resistance levels were held. Then also, if we look at the retracement levels back from this low, we blew through here, built our resistance, but then we held here and actually didn't confirm this breakout and came back below it. So this week, I think we're probably setting up for the decline in soybean meal. I would like to see a little bit of a pull back up now here that we've had this decline. And on that next move higher, I'm going to be looking for sell signals. If you'd like to be involved in this market as well, I recommend taking a look at your sell signals in soybean meal. All right, and last up today is we'll take a look at the energy markets, which had some heavy selling and some interesting trading this week coinciding with the bank failures. Okay, taking a look at the crude oil chart this week, it doesn't make complete sense why we had a breakdown in crude oil coinciding with the bank failures. But there's a couple other things going on in the market. One, the hedge funds groupthink hit them once again, and they had a long oil short bonds trade on that they had to unwind this week, which really caused a lot of selling pressure. But the thing to keep in mind with crude oil is the Biden administration needs to refill the strategic oil reserves, and they've said they would be buyers below 70. So we're now below 70, and buying did occur. Not really sure it was them, but in my opinion, we're going to be in a range with crude oil, and you're going to want to be a buyer around 65, and you can sell it all the way up to 85. I don't typically hold on to things that long, but that's the range I think we're going to be in for crude oil for months going forward. And you're going to see trading in those areas. But more specifically right now, and why I think crude oil is set up for a bounce, is we've hit the Williams valuation. Crude oil is now undervalued compared to gold and bonds. Sentiment, as you can tell from the chart and the hedge fund unwind, hit rock bottom today, which typically will cause a bounce higher. And as I was just saying, the hedge funds started liquidating their oil. They did it heavily here on last week. We don't have the commitments of trader update specifically for that yet, at least on my platform. But you can see here that the commercials, they look like buyers. Really what they are is not sellers. So, China and other people are going to need more oil, but the commercial producers of oil are not going to be aggressive sellers at $65, $70 a barrel. They're going to be waiting until it starts to move up again. And that's why I believe we're going to be in this trading range between 65 and 85 in crude oil. Because as we move towards 80, all the oil companies are going to start selling their oil again on the open market. So the last thing we want to take a look at today is natural gas. Because I know we still get a lot of questions about natural gas. We still have the ADX at above 40, which would indicate that the market is bottoming in natural gas. But this week, I had some people asking, because I'm looking for a confirmed breakout. These trends, especially this nasty one we've had in natural gas, are not going to reverse. We're not going to have a V bottom reversal in natural gas. It's going to take some time, and we see that forming here. 18-day moving average once again has come in. We've been forming that base over the last couple of weeks ever since we hit the ADX crossing 40. You can see here we have resistance up here and here now in the 18-day moving average. What I will be looking for is a breakout above these levels, and not just a one-day kind of breakout. I define breakouts as when you have a down close and then it moves up above that in the future. Too many traders see these lines on their charts And if they're already there, they all push it higher the next day, and then all those buyers are out of the market. We need to see a big reversal off of a bar like this and then a breakout higher. When we're crossing this 18-day moving average, I like to see 2 bars above it to indicate the trend could be changing and then look for buy signals. But you take your buy signals out there, but it's very important when you're trying to trade reversals in the markets, especially very deep selling that we've had like this in the natural gas, is to look for a strong confirmation that the trend has changed before you enter the market. Otherwise, you're just going to get whipshot back and forth in the market. And natural gas, they call it a widowmaker for a reason. There's a lot of money in each one of these ticks, and you can lose or make a lot of money very quickly. Thanks for watching Just Some Guy Trading. If you want to see more content like this, please subscribe and like, and I look forward to seeing you next week.